Good morning. Good morning. How's everybody doing this morning? Everybody good? Taking a look at oil here. I see building up momentum to the upside. Yeah, it's coming up into this area of weekly supply right here. Right here. And the interesting thing is the basing that was that's being created here. When I see basing like this right inside of supply, that leads me to suspect the institutions are preparing to take this higher like that. That's what typically happens when we have that. So very, very easily can come here to the 73s up around that area. Good morning, Rodney. Nice to see you. All right, so yeah, it looks good. 73 for oil, especially once this 67.94 area gets taken up. Right, but it is looking good. It's looking very promising. And so we're getting a nice uptrend here on the daily chart. So let's switch that to uptrend. No longer just a regular trend line, but I think this is a legit uptrend here. Let's take a look here, double check. Yeah, you know, I want this candle to close first up here. If this candle closes up here, it would be an uptrend. Okay, all it has to do is close up there, and then we have a daily uptrend. And here's the interesting thing, right? We had that weekly area of supply up here, like this, right? Let me double check. It would be the whole area. So it would be like this. Okay, that's the weekly area of supply. Let me draw that a little bit neater, that we're inside. Now, the first time we came up, we tested it here. And then we tested it here. And now we're coming into it again. So typically the banks wouldn't do this, right? If price was going up into weekly supply and the banks wanted to use that weekly supply to cause price to drop, they typically wouldn't contact that supply 3 times before dropping price. All right, that's not typical. Once is usual, twice is unusual, but twice can happen. The reason why it would contact it twice would be to create some kind of a formation like this, only for it to eventually drop like this, okay? So once you got the 2 tests and then the 3rd test, that tells me that they are interested in removing their supply. So knowing that there's a high degree of certainty of this type of move coming in to the market, you can look for long trades, but you have to understand the risks involved, okay? The risks involved here is that at the end of the day, we have a weekly area of supply in play, and it's not highly advisable to be going long when supply is in play. At least for somebody who's, you know, not used to trading supply and demand, or somebody who's new at trading supply and demand, it's not advisable at all to trade a long trade while price is sitting inside of a demand zone. Not ideal. But you know, once you build up enough experience to know that this usually doesn't happen if price is going to drop, right? basing and then a nice move up like this. This is not typical of the formations that the banks would create if price would drop. So you have that on your side. And then like I was showing you on the daily chart, you have the 3 tests here. 1, 2, 3 tests inside of that area of supply. That's not typical. So these are things that you would collect over, a long period of time. It takes time to collect this information about the charts and how price plays out. But over time, you'd start to know these things and see these things, and you'd start building up your the probability of a trade working out, even if supply is indeed in play. So from what I'm seeing, I see a very good chance that this can go higher. Okay, daily uptrend right here, daily uptrend. So there's a couple options to get in long. I think one of the safer options is if you're going to be getting in long, it's got to be based on something, all right? So to take a long on oil, we have this expectation that weekly supply is going to be taken out, but there's no uptrend officially based on our rules on the weekly chart. When there's no uptrend, it tends to make the chart unpredictable, okay? The daily chart has an uptrend and the 4-hour chart. So if I was going to be basing a trade, I would, if I was to trade this based off of the 4-hour chart and the 4-hour trend holding, I'd have to put my stop loss below this demand zone here. Okay, so if I blow this up, we have an uptrend here on the 4-hour chart, right? Here's your ascending trend line, and we have demand right here. That's a demand zone that we located. So if you're going to go long on oil, you couldn't just go long now and put like a stop loss below, these candles here. That wouldn't make any sense. Okay, on a lower time frame, that might make sense. You might look at a 1-hour chart and say, oh, this looks like a good trade, but it wouldn't be a really good trade. If it worked out, you'd be lucky, because the only reason why it would work out is because the institutions would come in with some serious momentum and cause price to go up, right? But we don't know if that's going to happen. We won't know until it actually happens. What we do know for a fact is that on the 4-hour chart, we have an uptrend. What we do know for a fact is that the last time the institutions created major demand, it was right here. That's what we know for a fact. So if I'm going to take a trade, I want to take it based on facts, not on assumptions. So I think that would be what I would be doing, is making sure that my stop loss is below this area of demand. If I felt like price wasn't going to drop into that area of demand to continue higher, I can get in long now, but my stop loss would have to be there. But this is basing off the 4-hour chart. So I would say a long trade based off this 4-hour chart, the chances of this trade working are probably about 65%. Okay, and that's based on this 4-hour chart. Now, when you bump it up to the daily chart, now we're talking about a structure that was created on the chart that took multiple days, right? Because each candle takes a day to create. So this trend was formed using 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, and we're on the 23rd day. 23 days of trading it took to form this trend. As opposed to the 4-hour chart, it took a lot less time. Whatever takes more time to create is more sustainable, all right? So if you're going to go long oil and you're going to base your stop loss below this area of demand, because we have an uptrend and we have demand here, this is what I know to be true 100%, is that this is institutional demand here. If I was going to be taking a trade based on the daily trend holding, Now, we're looking at something like 70%, maybe a little bit higher percent chance of holding because of the structure, because it's on a higher time frame. It's considered to be stronger. We're expecting it to hold better than the 4-hour trend. So you'd increase your odds just by doing something like that. Okay. So that's oil. You guys want to take a look at any market? Just write them up in comments. If I have some time, I'll take a look. Nice to have you guys this morning. Thanks for joining. I see some faces that were with me yesterday. And I already got one thumb down. Oh, that's nice. I don't know why somebody would give a thumb down. No idea. Yeah, those that are supporting me, I appreciate it. If you can give me some more thumbs up, I'd appreciate it. Okay, I would appreciate it. So let's take a look. Euro USD broke daily demand. Yeah, it did. Let's take a look at that. Which was our expectations, right? We were expecting that. Why is that? Well, because we understand that we want to wait for the banks to create an uptrend here, right? So for the banks to create an uptrend, we need them to pull price down, right? We were talking about that yesterday. We need them to pull the price down. We need them to create some basing. And then we need just to watch them push price up. That is what we need to see them do, because this initial move up here, this is nothing, right? This is just an initial reaction from demand. This is not the formation of a trend. This is just reacting from demand, right? Demand was down here. So when price drops into demand, there's going to be that initial move, right? It's like when you drop a ball on the ground, it hits the ground, you see that initial move up, right? But eventually the momentum dies off. And what happens with price? It starts to reverse down and come back down, right? So just like a ball hitting a ground, boom, 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 it dies, the momentum dies down. What's required for it to start heading back up? There has to be some new force that comes in, right? New force has to come into that to price, and that new force would be buying from the banks. So once they start buying, then it starts to take off. So that's what's happening with price right now on the euro. That's exactly what is happening with price. So in order for this to happen, we'd expect this area to be taken out, probably hold this area, but it could go lower to the area below it. It's very possible. Very possible. It could go even lower. Who's to say? During this phase, this is unpredictable. During this phase here, where price is bouncing, it's unpredictable. When it starts to build up momentum, that's what's predictable. Okay? Because when the energy is dying down, it's in a phase of energy dying. So it could move in very unpredictable ways, right? As the energy is being built, formations, trends, those things are built on the charts. Those are predictable. Those, we know what those look like. We can spot those because when you study the charts and you look at where price is in relation to the higher time frame areas of supply and demand, you can see it. You start to see that momentum die down, it starts to build up, and then what formations are created when it starts to build up. So this is looking good. This demand zone taken out, yeah, and we are expecting some more downside. Okay, what were we saying yesterday about the dollar? Likely higher, right? So it removed this area of supply. If you take a look here, okay, see that little bit of wick on the opposing side of that supply? It's taken out. So it opens up the doorway for a move higher, okay? And you got this area up here now. So that opens up the doorway for the move higher. We are in Wednesday, sorry. We have a few more days, so it's possible for the rest of the week we see potential for a move higher. But again, it's the same thing, right? The only difference here is you reverse the idea of that ball bouncing. It's the same thing though. Boom, energy dies. And now then the banks have to come in and build up something, and then there we go. It's like building a trend. Once it's there, once it's formed, then you know the momentum is in, you know the banks are interested, you know the banks want to push price, and then you start engaging in those markets. During those times where the ball is dying, very difficult to time entries. Very difficult. You can get into what we call theme trades, where you open up positions and then it's based on the overall theme that price is momentum is dying and then building and then eventually going to head lower. But you have to know how to manage those, and you have to understand that it's going to take time for those things to play out. And if swaps are not eating away at your account, then it can work out. If you're not concerned about having a stop loss a little bit further than what you would typically put them in, then you could do that. Theme trades have worked very well for me, very well, as many of you have seen. They've done very well for me. Good morning, Kev. Would you be able to analyze silver? Yeah, what is going on with silver? I hear there's going to be a short squeeze. It's going to do this. It's going to do that. What's the story with that? I see that every once in a while. The same guys who pushed up GameStop are working on silver. I mean, sure, could it head higher? Yeah, okay. I guess it could. Anything can happen, right? But let's look at silver. So silver is, let's go back in time here. This is one thing I do like, is that when I look at where price is, if I go to the left, I can see that there is price history here, right? And it doesn't matter how far back price history goes. There's always something to see there, right? There's always something to see there. As incredible as it may seem, you can actually know where price is going to head towards, or where it's going to stop, or where it's going to reverse based on price action that has taken place 10, 15, 20, 25, 30 years ago. All right. Don't ask me how or why, but it works. All right. And we do this consistently in our classes. We show how that works. So if I look at price now, it's responding to the 30s, right? All right. So I go back here and I take a look at this price action here. And I try to figure out what was taking place here. Let me see if I see anything that just really, really sticks out. Uh, why don't I trade silver? There's very good reasons why I don't trade what I trade. Because if a chart doesn't behave in a predictable manner, then I'm not interested in it. I'm only interested in trading things that are predictable. And because I trade to make a living, I trade to make money. So if somebody told me, hey, you want to play this game? It's pretty cool. Everybody's doing it. It's really cool, but your chances of winning are 20%. Or do you want to trade this other game and your chances are 70%? I'd say, let me trade the one where I have 70% chance of winning. So that's what I do. And so that's why I get the results that I get, is because the markets I trade, I know them like the back of my hand. I know them extremely, extremely well. So I don't want to trade markets that move and react in unpredictable manners. Because I look at the silver, for instance, and like I could show you. I'll show you it. What's the difference? Because that's a great question. I get that asked all the time. Okay. It's kind of like what I was saying about when momentum dies, okay? What the predictable chart patterns are. So let's look at silver, right? Look how many weeks of candles we have here. And what did it do? Nothing, right? It just stayed within a range. It could have broke out of this range to the upside or to the downside. Look at the fake outs here, breaking past the highs and then coming right back down. There's no predictability in this. So why would I want to trade that? Look how many weeks. You'd be stuck from, August of last summer to now in this range. Where's the predictability in there? There really isn't any. So why would I want to be involved in something where there's no predictability? You remember the euro when we were looking at it yesterday? How predictable it was going long and how I could time a perfect entry off of a 4 hour and off of a 1 hour zone because it was predictable. Because based on what price was doing, it was highly predictable. Um, this one, for instance, is not highly predictable. So no good trading opportunities. Okay. We had supply here that worked. Okay. We had a supply zone from the banks that worked, that dropped price down here. Okay, good. But would I have taken a short at that point? No, I wouldn't have. Why? Because it could have easily broken through. Considering what was taking place on the other charts, this could have easily broken through. All right. So I wouldn't have shorted there. And you could have people that would say, oh, look at that supply zone. It held so well. Yeah, I took a short there. Yeah, I did. Or, yeah, I should have taken a short there. Well, yeah, it looks great afterwards, but that's not how supply and demand works, okay? It has to be in predictable scenarios. When price is doing this, this is not predictable, okay? Because if you have supply, it could work, but could also be taken out. Why? Because this is what we call ranging. When price is ranging, Hello, 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 hello. Can you guys hear me? Are we back? Sorry about that. All good? Yep, good. All right, good stuff. All right, so we are talking about silver, right? And the unpredictability of price. It's in ranging. So I wouldn't want to trade when the market is like this. It's just unpredictable. That's the bottom line with it. So regardless of all the hype to get in, when price is ranging like this, I don't want to be involved. I want clear trends. I want predictability. I want to know exactly what the banks are doing with price so I can get involved. I can find out what it is that they have planned, and then I want to do it. Whatever they have planned, that's what I have planned. Okay. So I wouldn't want to play around with that. My personal opinion. Okay. Let's see. You guys mentioned silver. You're the best caught trader in the whole universe. I appreciate that. I've been studying the caught reports for many years, many years. So, um, yeah, thanks for the likes, by the way, 21. But two more people came in and gave me dislikes. Come on, guys. Jeez. There always has to be a couple in every bunch, doesn't there? Pound. Pound is in a weird situation. We've talked about this in the school because we got a situation where we have major supply in play, and we also got this major trend line here. Okay. So what's going to take place is you're going to have price do this, get stuck in between. So while it's stuck in between, I wouldn't want to touch it. Okay. Could it go up? Yes. Could it go down? Yes. So there's a lot of things that could happen in between that. So I wouldn't want to touch it until I saw some specific moves taking place. So to go short, I would need this trend line to break. Or to go long, I prefer to see this taken out. Okay. That is when you have high probability on your side. Now, by examining the markets, we know that there's a decent chance for price to move higher from here. So if you started getting in long, you'd have to look at what am I going to base my long off of? It's just like oil, what we were doing with oil, right? Oil had trends on the daily and the 4-hour chart. I don't see trends here. Okay, I don't see trends here. So if you go long, what are you going to base it off of? There's not even a trend on the daily chart. What do we see? Looks like silver ranging. Okay, so while price is in the range, I don't want to get involved. Not for me. It's not high odds, so not a good idea, right? Once we have a solid trend, okay, solid trend to the upside, then I can start taking long positions, knowing that, hey, price was ranging, and in that context, I understand why they're ranging. But now they've decided to take out the ranging and to put in a solid trend. There's probably one reason for that, and that is to facilitate the move higher, to break the obstacles on the weekly chart, and we're probably going to see price head higher. So that would be a safe assumption to make. Some assumptions are dangerous to make, but I think that would be a safe assumption to make. All right, we'll take a look at one more, and then I will let you guys go for the morning. It was a good half-an-hour session. 24 likes, 3 dislikes. Not too bad. I appreciate the likes though. Anyone who hasn't given me a like, if you can, I'd appreciate it. That way we can build up our viewership. So we'll take a look at one more. Let's see. Let's see, pound yen. Pound yen. Okay, we'll take a look at pound yen. Pound yen is one that we traded earlier this year, made some good profits on that one, the pound yen. Pound yen rallied up strong because we knew that we were expecting a massive rally in the US dollar Japanese yen. So a lot of weakness in the yen and the strength in the year and the pound. It was expected. It was expected. So it was a nice long trade. And we were signaled to go long. I believe, yeah, when we first signaled long, price was down here, if I'm not mistaken. Tim, you with me, buddy? Was it down here? Somewhere in this area, right? I said slowly we can expect price to make its way up like this. Yeah. And then once this area got taken out, lo and behold, this thing will fly, right? That's what we were saying. Once the banks take out this area of supply, it's going. Okay, it's going to fly. And take a look at that. It flew. Okay, so that was the chart signal right here. The chart signal was wait for the opposing supply to be removed, and then this thing is gonna, yeah, somewhere down there. That's right. Wait until this opposing supply is removed, and then this thing will fly. There's nothing to stop it. So that's what has been taking place. Okay, that's what took place. So it's stalling now. Why is it stalling? Well, because we've got price contacting supply and stalling out. On the monthly chart, we have major supply here, major demand down here, and price is just, as you can see, bouncing from one to another. So going long here is dangerous because it can stall out and then just drop. So that momentum that took price from down here to here is now pausing. We rode the momentum when it was in play, and it worked very well. Why? Because we knew that it was going to do that based on what the US dollar Japanese yen was doing and the overall markets. We knew with a high degree of certainty it was going to rally. So now we took advantage of that move, but now very dangerous to trade. Okay. Remember the condition of the pound US dollar, what we were just talking about, right? That it was like forming a wedge, right? Reacting downwards from supply. And then you had that upward pressure of the ascending trend line. And it was keeping price in this range. So is that predictable or unpredictable? It's unpredictable, right? So do we know for sure what direction pound is going to move in the next couple of weeks? No, we don't. We know longer term it's likely going to head higher, but within the next couple of weeks, we don't know if that's going to happen. Okay, we don't know. So would I want to trade any pound pairs right now? Not really, unless I knew with some certainty that the yen was going to do something, okay? Because one thing about the pound US dollar is the fact that it's in this wedge. We can safely assume that in the next few weeks, it probably won't go very high and it probably won't go very low, all right? So that's a safe assumption to make. It probably won't go very high or it probably won't go very low. So knowing that, if we took a look at the Japanese yen, for instance, and let's say we saw a lot of evidence to suggest that the yen was going to get stronger, then this could be a good shorting opportunity. Why? Because the pound just sitting straight and not moving stronger or weaker would help to stabilize the pound yen, right? And then the weakness in the yen would help to drop, or the strength in the yen would help to drop price. Okay, so for price to drop, pound has to get weak and the yen has to get stronger. Why do I say weakness? Stronger, stronger, stronger. Yen has to get stronger. Okay. So let's quickly look, right? Just to make a point here and show you how this works. Did the yen drop? Yeah. From supply? Yeah. Exactly as I had mentioned it in the class, right? Supply was going to be contacted and it was going to drop from 111 to what? 107s. That's a nice drop, right? That produced some nice day trades. So it came down, it dropped, it hit the end, the top side of the descending trend line, and now it moved back up. So this is also in between. Okay, stuck in between two areas. What did we see with the dollar yesterday? It might rally a little bit. Yeah. So this could rally up a little bit too. But I think overall we are expecting more downside. The problem is, we've got price stuck between these two objects. It's not clear. There's no free flowing trend to the upside, which is going to dictate that price is going to move up. There's no downward trends that's going to dictate that price is going to move down. So there's no high probability setups here. Okay. There's no high probability setups. What do we say about the dollar? Likely going to rally, but at some point, we don't know exactly which point, at some point it's going to stop and start heading lower. So what would be great is we watch the dollar, we watch for it to rally, we watch for it to stop, we watch for it to create the formation on the charts that is going to tell us that they're starting to turn price over to the downside. And then we look at the US dollar Japanese yen chart. We find similar patterns to help show us that the momentum is going to kick in. Then we look at the pound US dollar chart, make sure it's still stuck in that range. And then we take a look at the pound Japanese yen, and then we can find entries to get in short. Make sense? You see how that works? You see the logic behind that? Why we would do it that way? That's how you create high probability trades, is by doing things like that. Okay. So that's it, ladies and gents. I'm glad you came with me this morning and we chatted. And again, if you have any charts that you'd like to take a look at, I will see you back again tomorrow morning, where we'll do the same thing. We'll take a look at the charts, see what's going on, see what's playing out with price action. We'll examine the pound, the dollar, oil, see what's going on, the euro, gold, and watch it how it plays out. And we'll take it step by step. We'll look at the story of price and we'll break it down as to what the banks are doing. And then we'll see if we can find some good trading opportunities. All right. Kev, you rock. I haven't started live trading yet, focused on learning first, but I don't have a single doubt in my mind that I am in the right place. Thanks a lot. Hey, thanks, Rodney. Rodney, I was talking about you yesterday. People were asking me, how fast somebody can learn. I said, well, it all depends on your devotion. You joined us, boom, within a month, you were just killing it. You were just killing it. Why? Because you were spending the time watching the videos, and watching the classroom sessions and stuff, and you were just killing it. So keep up the good work. Keep up the good work, okay? It's very inspiring for other students to see you achieve so much in such a little time. It's crazy. All right. So enjoy your morning. Again, thanks for joining. Thanks for the likes. If you haven't liked yet, just give that click. Boom, 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 boom. Pump it up a little bit more for me. I appreciate it. And then we'll see you tomorrow morning. All right. Thanks, everybody. Enjoy your day. Be well. And we'll talk to you soon.